how do we know if we're ready to buy a home? Should we buy a home? Is now really the best time to buy a home? If you've asked yourself any of these questions, then you're going to want to keep watching. I've got 5 things to cover for your consideration. I'm Leann Russell, real estate agent with eXp Realty and financial coach. The fascinating world of real estate and finances can be so confusing, but guess what? They don't have to be. I'm going to show you how to conquer both real estate and finances with each new video. New episodes go live on Mondays, so stay tuned and keep watching. The thing is, there's no right or wrong answer here. Of course, as a realtor, I am passionate about home ownership and would love to get you into that dream home. But as a financial coach, the truth is everyone's situation is unique. The answer depends on a few things, starting with question number 1. Do you know your credit score, or do you even need a credit score? This is a topic I briefly discussed in episode 3 titled 5 First-Time Homebuyer Tips. I brought up manual underwriting in tip number 2, and I wanted to go a little more into detail on what manual underwriting is in this episode. But first, let's discuss what mortgage underwriting is in general. Mortgage underwriting is the process a lender uses to determine whether or not you qualify for a mortgage. To break mortgage underwriting down a bit further, there are 2 types of mortgage underwriting, automated and manual. Automated underwriting is a computer-generated process. It can be used for several kinds of loans, not just mortgages. With just a small amount of info, like your social security number, address, and annual income, the program can gather things like your credit history, that is, if you have a credit score, of course. And since the automated underwriting system is preset with certain rules and guidelines, it can process things quickly. You'll still have to provide certain documentation to an underwriter to finish up the loan and close on your home. Your debt-to-income ratio matters in automated underwriting processing, so be sure to pay off outstanding debts as soon as possible. Your lender will let you know which debts and how much of a payment should be made to reflect your credit scores. It's crucial in this type of underwriting to listen when your lender says to only pay $75 on a debt rather than paying it off. The lender is most likely using a credit score simulator and can help you with the adjustment needed to get you exactly where you need to be quickly, credit score-wise, in the automated underwriting process. If your credit score is not exactly where it needs to be, then a lender will most likely suggest obtaining a credit card to boost your score quickly. They'll recommend keeping the newly obtained credit card usage to a specified minimum on percentage of usage. Generally, it's about 10%. However, make no mistake that self-discipline is crucial in maintaining this quick reach for a higher credit score. Life happens and you can find yourself justifying a higher credit card usage and then end up in a heap of debt and unaffordable or missed payments with interest that actually causes harm to your credit score. Proceed with caution, my friend. On the other hand, manual underwriting is a process that looks at the full picture of your financial stability rather than just your credit score. Manual underwriting is done by a person, not by a computer program. The underwriter working on your loan reviews your loan application and uses supporting documentation to figure out whether or not you can afford a mortgage. The underwriter won't use your credit score to decide if you qualify for a loan. Instead, they're going to look through payment records and documents that prove you can pay back your mortgage. Rent payments, utility payments, gym memberships, insurance payments. These are just a few examples. If you've been paying those on time and in full, you're looking like a pretty responsible and trustworthy loan candidate. In other words, manual underwriters look at your whole financial picture instead of just your relationship to debt. If you have a special circumstance, like a decent net worth but no credit history, basically meaning you have money but no debt, your lender might choose manual underwriting instead of an automated process. Manual underwriting means you have to bring more paperwork, and it typically takes longer than the automated process, which makes sense because you aren't dealing with a preset computer program, but with a living, breathing human. Churchill Mortgage is a great place to start when searching for a lender who will complete a manual underwriting process for you. Their link is provided in the description, so just be sure to interview other lenders as well. In either underwriting process chosen, it is always in your best interest to be completely transparent with your lender. There's nothing worse than working to get your dream home only to find that failing to provide a piece of information ends up costing you the entire loan approval. If you take away anything I have to say in this episode, it's this right here. Do not get your pre-approval with your lender and then go finance a car, furniture, or a fancy vacation. Protect yourself in all aspects and just ask your lender what is and isn't okay before doing so. Trust me, your dream home depends on it. Remember, you can get your free credit report annually from all 3 credit bureaus at annualcreditreport.com. Now on to question number 2. Do you have a sense of how much home you can afford, including closing cost? You see, it's easy to get excited after finding the right home and getting a pre-approval for that dream home that you forget that now you actually might need a down payment or other upfront costs before you get to the closing table. Your earnest and options are expected to be delivered within 3 days to your escrow agent or title company. Let's first take a look at a few other upfront costs: inspection, appraisal survey, electrical, plumbing, HVAC inspections, roof and foundation inspections, and sometimes a septic and water well inspection is beneficial. Here's the great news though. Sometimes, but not always, these items can be rolled into your closing cost. So what are closing costs exactly? In some instances, these costs are also called cash to close. Closing costs are the funds needed up front that aren't included in your loan. Taxes and insurance payments are prorated and are generally dispersed between the buyer and the seller. For example, if a home is sold in June, because property taxes are paid in arrears, the seller will be responsible for the property taxes from January through the day of the sale as a debit. On the other hand, if a home is sold in June, because property insurance is paid at the beginning of the year, the buyer will be responsible for the property insurance from the sell date of the home through December as a credit to the seller. Hopefully I didn't confuse you too much on that one. Along with property taxes and insurance prorations are loan costs and title and attorney fees. The absolute most important part of a mortgage is your mortgage payment. Your lender will break down your monthly payment based on PITI, principal, interest, taxes, and insurance. You want to make sure that not only is your overall purchase of the home affordable, but you can comfortably cover your monthly payments as well. Don't purchase more home than you can afford just because your pre-approval letter says you can. What's that old saying? Oh yeah, just because you can doesn't mean you should. Question number 3. Do you have money saved for a down payment? Based on different types of loans available and criteria to be met, there's a chance that you could qualify for a down payment assistance program that may cover all or some of your down payment. Be sure to speak to your lender for more information regarding these types of programs. One that comes to mind is called T-Shack. Your lender will have more information for you on this particular program because as a realtor, I choose to stay in my own lane. Lenders are the professionals when it comes to lending. I personally recommend adding PrimeLending to your list of lenders to interview. The local branch here in Brownwood, Texas has been great to work with for many, and yes, their link is also in the description for you as well. Another great one to consider is Open Mortgage. Their staff has been phenomenal in assisting real estate agents and realtors with making buyer and seller dreams come true. Loan products range from, but are not limited to, conventional, FHA, USDA, VA, and so on. Each loan is accompanied by its own down payment required percentages that a buyer will need to provide as a down payment. Your lender will help you determine the best loan product fit and whether an automated or manual underwriting process is more suitable for your current needs. Just as I also recommend interviewing at least 3 real estate agents or realtors, I highly recommend doing the same with your lender. You see, it's okay to say no to the first 2 agents or lenders so long as the last one is the right one for you. And on to question number 4. Do you have savings to cover emergency maintenance? Oftentimes, when a buyer purchases a home for the first time, it's forgotten to take into consideration that you are now responsible for all maintenance and repairs of the home. If the hot water heater goes out in mid-shampooing, guess what? You're replacing it, not the landlord, because remember, you let him go. Or maybe some squirrels entered your attic through the roof and chewed a few wires. Yep, you guessed it. That's your responsibility to replace as well. But hey, at least you aren't paying someone else's mortgage though, right? The good thing is that you can place a claim to your home insurance at the expense of a deductible for all major repairs. Most often, it's cheaper to just pay out of pocket for the smaller repairs though. Just ensure that you've created a decent sized emergency fund for when Murphy decides to pay a visit. You know, Murphy's Law? Yeah, that's the guy. And last but not least, question number 5. Do you feel ready to put down roots in a community? You've heard it said multiple times, my friends, whether from a lender or even a real estate agent, that paying someone else's mortgage isn't anyone's picture of perfection. Let me be the first to tell you that temporary camping in a rental is absolutely okay if it's what is best for your current needs. It's a huge commitment to put roots down in general, let alone making sure that it's the right community for you. If you have just moved to a new area for a job position or career change, chances are you want to get to know the neighborhood prior to deciding to buy. Or maybe you don't plan to be in a given area for a long period of time due to attending college or temporary job placement. Generally, the number one reason to rent is because you need to get your finances and credit score in order prior to purchasing a home. It takes on average 3 months to see a change in credit score once your lender gives you a plan of action to carry out, assuming you didn't have the desired score to begin with. You're going to need a roof over your head during that time if you aren't planning to stay with family and friends for the time being. Just remember that the shorter your lease, the more in monthly rent you're going to pay. As a financial coach, I can help you create a plan by guiding you in setting up a budget, knocking out debt with a debt snowball plan, and showing you how to save for emergencies, down payments, upfront and closing costs for your new home purchase. Your direction is more important than your speed. These are the practical considerations. You'll of course want to factor in employment status, family circumstances, and lifestyle factors as well. If you're holding back on buying right now or holding off, what is it that's holding you back? Post in the comments below or contact me anytime if you'd like to talk through some different options. Just because one lender said no doesn't mean it's the end of the road. Your determination matters most, so let's work together to get you a yes. Again, there are some phenomenal realtors and real estate agents out there. Just be sure to interview at least 3 to determine which one is the best fit for your needs. Hopefully, I'm one of those 3. But if not, I'd be more than happy to help you locate the right one. Always make sure your chosen agent places you in the driver's seat. They are there to guide and direct you, but ultimately, you should have the final say. Just remember that if and when the lender gives you bad news or just news you weren't prepared to hear in general, as your chosen realtor, my realtor hat comes off and the financial coaching hat goes on. You'll get me 100% from start to finish, no matter how much time is needed. On the other hand, if you're looking to bypass a lender and want to plan to pay cash, I can also assist you in creating a plan for that as well. Thanks for sticking with me to the end. Just as you've encouraged me throughout this episode by just showing up, I want to encourage you to share it with anyone you think may be able to benefit from what you've heard here today. Do me one more favor before we wrap up. Type in the comments below what topics you would like to see covered in future episodes as I help you conquer the world of real estate and finances. If you love this episode, be sure to come back on Monday for the next one. Now click like and subscribe and get to interviewing those realtors and agents so we can get your current home sold and your dream home found.